today, and we're going to be going into a deep dive into the current state of the Canadian economy, the challenges it's facing, and what this means for the Canadian dollar and investors. So let's get started. Firstly, let's set the stage, okay? I pulled out some points from this article on May 7th, 2024, written by David Rosenberg for the Financial Post, which talks about the state of the Canadian economy, why it's going down, and what this means in terms of the interest rate cuts, which have happened. Let you guys know, last week, the Bank of Canada did cut their rates. So this was kind of an old article now, but it was a good precursor to why the Bank of Canada would cut their rates, of course, right? So let's set the stage. The Canadian economy has been experiencing some rough waters lately. Since 2014, there has been a net outflow of real capital totaling nearly $400 billion, which is not good because that means investment is leaving the country, meaning capital flight. And if I might remind some of you, 2014, we had a major oil crisis where the Canadian oil markets crashed. And that led us into a mini recession where the Canadian dollar was trending down for 6 months straight. And that was one of the major downfalls of actually the Stephen Harper government, and which led to the Trudeau Liberals being elected, and they were given on the pretext that they would help the economy and the middle class again after this mini recession we had then. So this trend of capital outflow has been putting a significant strain on the Canadian dollar, which is now trading at $1 to 1.38 Canadian. If we go back to 2011, the Canadian dollar used to be trading for actually higher. The US dollar used to be more valuable than the American dollar, okay? If I remember correctly, and now let me actually go and find out for you guys. Canadian to USD. Okay, let's do a max chart. So one Canadian dollar is 0.73 US dollars. But if we go back to, let's see, around 2011, yep. You see this period right here. From 2011, after the financial crisis basically, around 2010 to 2014-ish, when the oil market started to crash, the Canadian dollar was on par with the US dollar. One Canadian dollar was equal to one USD dollar. And I know that sounds pretty crazy, but it was a reality back around 10 to 12 years ago. And after that, you can see what has happened to the dollar, and we've gone down ever since, and now we're stagnating. We fell all the way down to around 0.72, 1 CAD to 0.72 USD, and ever since then we've been stagnant, and now we're at lower levels than we've never seen before, okay? We're still at that 0.73 USD to 1 CAD, so things haven't got better since then. And now I'm just going to talk about the factors that are driving this economic slowdown in Canada. And I'm going to be citing this article by Scotiabank where I pulled these points out. If you guys want to go there and search and find out and read about the article yourself. So, from the article, one of the major factors contributing to this economic slowdown is the structure of the Canadian equity market. The S&P and TSX Composite Index, which represents the Canadian stock market, is heavily weighted towards financials, i.e. the insurance companies and the big six banks, like the insurance companies Manulife, Sun Life, RBC, BMO, Scotiabank, CIBC, National Bank. These are the big banks. I might have missed one, but also TD. These are the big banks that have been really propping up the TSX over the last last little while, and pretty much are the biggest companies in Canada. RBC, in terms of market capitalization, is the biggest Canadian company by stock market's capitalization. So that really shows you that how diversified the Canadian economy is. And when I say that, I mean it's not diversified. We're really heavily weighted in the financial side of the market. And also, now to move on to the next point, is heavily weighted towards financial and resource sectors. As I said, oil. And if you remember from the earlier part of the video, oil had a crash in 2014 and 15. And basically, the article goes on to say, unfortunately, these sectors have been underperforming compared to tech and consumer discretionary sectors globally. They haven't been able to repair themselves. The resource market, which Canada heavily relies on for its economic growth, has been stagnant, and we have, at least the Trudeau Liberals, have tried to replace it with other factors such as economic growth through population growth or the housing market. But if you've watched my previous videos, you know that's not sustainable. So back to the article, back to the point. As a result, Canadian equities have lagged behind, returning only 4.1% this year, the year of 2023, compared to 12% globally. So that really just shows you that we should be at par, at least with global stocks and capital markets that are around the world, but we're not. Okay. And that's because we're not a diversified economy and we don't have diversified businesses, meaning we should be in all sides of the market, but we're only really heavily weighted in financial and resources sectors. And on top of that, we're having a capital outflow since 2014. So investment is leaving and there's no diversification. Those are two big points. So what is the impact on the Canadian dollar? So I'm going to pull these points from the PIMCO article. PIMCO is a big, huge asset manager that manages a lot of fixed income products worth over, I think, about $2 trillion. So this is their market commentary and opinion on what the impact is on the Canadian dollar of the lagging economy. So if you guys want to read this article for yourself, here's the title: Canada's Economy, Macro Challenges, Market Opportunities. This will be found on PIMCO's site, and you guys can go ahead and read that for yourself and learn more. So back to the main points that I found in the article. PIMCO says this underperformance has a direct impact on the Canadian dollar. With a weaker economy and less competitive industries, the Canadian dollar has struggled to keep up with the USD. The structural differences between the Canadian and US economies, especially in the housing market, further exacerbate this issue. Big point there, remember. The housing market is a big issue for the Canadian economy. We all know that. I don't even need to explain. Canadian households have a much higher debt to income ratio and shorter mortgage terms, leading to quicker adjustments in home prices when interest rates change. So, to end this off, I'm just going to go and say that all credit is due to the Bank of Canada, okay? The experts were saying that the Bank of Canada should cut the rates, and the Bank of Canada did the research and they found out that the Canadian economy needs rate cuts right about now so that our economy does not get hit any more than it has to be. Inflation has been controlled, inflation has cooled down, and Canadian consumers can take at least a little bit of a sigh of breath that we might not have to go through even worse strain on our financial situations and whatnot. And the Bank of Canada acted and they cut interest rates. So that's good, but I would tell you guys to expect more cuts to come, and that is the response of the Bank of Canada now to the current economic crisis we're facing. But let me remind you guys that this is the Bank of Canada. We still have to hold the federal government of Canada accountable, the Liberals accountable for their spending and the future spending they might partake in, because it is not going to be good if they keep this high debt and keep spending more than they have in their pockets. This will hurt the Canadian taxpayer, hurt our financial situation if the government keeps wasting money. Okay, Bank of Canada, good job. Federal government, no good. So basically, in conclusion, I just want to say while the Canadian economy is facing significant challenges, there are better roads ahead, honestly. Investors can find strategies to mitigate these challenges that we're facing here in Canada, and possibly they might have to invest in the U.S. market still, and more capital outflows will happen. But rest assured, if the Bank of Canada continues on its path and the government, if its mandate changes or a new government comes in and implements austerity-based economic measures and focused on investment in business and diversifying the Canadian economy, then we can expect better roads ahead. So thanks for watching. If you found this video helpful, please give it a thumbs up and subscribe to the channel for more updates on the economy and general investment talk. Leave a comment below with your thoughts on the Canadian economy and how you are affected by this issue, or what you see, or whatever perspectives you guys have. And I'll see you next time. Thank you.